All right, guys, we're going to start in about a minute, 20 seconds. T minus 1 minute 20. All right, good morning, Checkmate crew. Today is Wednesday, October 12th. It is 9:30 a.m. Opening bell here at the New York Stock Exchange. Let's go over what's happened. So about an hour ago, the PPI, the Producer Price Index, came out hotter than expected, 0.4% month over month. I did not go over the exact report, but I will. You know, there's a core number and there's a headline number as well for that. So I'll take a look at it more closely later on today, and I'll post anything I see on Discord. Okay, so that's that. But what's more important is what is the market's reaction to it? And let's see, TIP TLT looks like it is gapping up. So this is our forward inflation looking indicator. This is our inflation protected treasuries divided by long-term treasuries. Okay, the two different ETFs. All right, TIP, which is the inflation protected treasury ETF, and then TLT is the long maturity bond ETF. Okay, this ratio is actually traded. A lot of institutional traders or traders with deep pockets will trade this. It does take a lot of capital to do this pair trade, but it's been closing at higher levels. Okay, it was in this like no man's land for a bit, and then it kind of broke out. All right. Usually that also coincides with DBC going up, which is the broad based commodities. I'm not sure if this move is to be trusted on TIP TLT. Okay, I think it's very likely that it might get smacked down again, but we'll see. Okay, usually when it's high like this, you want DBC to be also trending up too. But on these days where it went down, when TIP TLT was going up, DBC did not. So I don't know if that's a valid signal now. All right. It does mean though, at least I think if it closes higher on Friday, if it closes around this zone on Friday, then maybe then that's a good indicator that inflation, is going to continue just to go up. I doubt it, though. I still think that we're going to see a deflationary report probably around either the November announcement or the December announcement. But, those are just guesses. Those are just opinions. We'll see. Tomorrow, we have the CPI report coming out tomorrow. Usually, it's not an important number, but it seems like this Fed likes to look at it, even though it is a lagging indicator. So we'll see what numbers come out tomorrow, and we'll see what the market's reaction is to that. Okay. Right now, speaking of bonds, right now there's a lot of volatility in the bond market. The MOVE index has been steadily creeping up, and usually when this goes up, the VIX goes up too. Okay, the S&P 500 volatility. All right. I've told you guys this for about a week now. The chart to watch, the chart of the day, the chart of the week, the chart probably for the next couple of weeks is going to be TNX, the 10-year Treasury, okay? This decides multiples on cash-producing assets like the stock market, all right? If this keeps going up, we're probably going to see multiples stay lower, okay? Meaning ceilings on stocks are going to mean more, okay, especially on the S&P 500. So yeah, if this stays at these levels or keeps breaking out, we may have to shift our value line to a different zone. Remember our value lines on SPY, okay? If we start getting into 4.5, 5 territory on to TNX, the value zone doesn't come until this line right here. All right, so that would pose, you know, that would this right here, that would that is where the next put walls are for on the SPX chain as well too. This corresponds to a level where there's a lot of actually bought puts right here. There's a lot of short puts here now at around 3,400. So if we see an undercut of that, we could see, especially if the Treasury TNX goes up to 4.5, definitely 320 becomes the next zone of interest. All right, I still will keep the plan of buying at 340, but I'll keep some ammo just in case if we do get to 320. Okay, and now I'm seeing the possibility that is a valid possibility now. So I do want to have some dry powder so I can take advantage if it gets to this point in my long-term account. All right, so that's what I think about TNX right now. I have those TLT spreads still, which are underwater. It's a hedge of my hedge, but I mean, I only used a portion of the profits for my short SPY puts from last week, but still, it would have been nice to see this go up. I still think at some point it does have a relief, but I may have been too soon in pulling the trigger on this, okay? But again, I think the chart of the day is TNX, okay? Where TNX goes, I think will be telling on where the market will follow. Dollar is still on a rampage. Oh, it was higher. It's coming back now. When last time I checked, it was around the 13.4, 13.5 zone. Okay. Well, in that case, I guess we'll see. We'll see if the dollar can come down. You know, that's definitely a tailwind for risk assets, especially after tomorrow's CPI report. The dollar is very hedged right now. There's a lot of derivative hedging going on for dollar swaps, and that if those get unwound all at once, I mean, we could see dollar come down a bit as those hedges unwind. All right, it is very crowded right now. A lot of people are hedged for the dollar to break out. So if CPI just comes out a little bit tepid or not as bad, we could see this again, the unwind. Okay, the unwind. Bank of England on the news. Okay, the pound sterling. They came out with some news. First, they said that they're going to finish their bond buying by the end of this week, and then after the currency market and bond market did not take that favorably, they came back out and said, well, if it's needed, we'll keep doing it. So a lot of mixed messages coming out of Westminster. So I have no idea what they're doing. Okay, nobody knows. I think nobody knows what they're doing. I don't even think they know what they're doing. So that wait and see approach. The gilt though is up. Gilt yields are up at least on the news. So we'll see. I mean, we will see what happens, but I'm sure that if there's some bad headline news coming out of Great Britain, we could see volatility trickle in here in the United States in risk assets as well. Okay, so another chart to look at is the British pound. See where if you see a strong breakdown, that just probably means we're going to see some volatility spill over. That's what actually happened yesterday. And yesterday, actually, I noticed that the British pound broke down very quickly on that news, and it sent our stocks down. We lost about 1 or 2% right in the afternoon from that initial news out of Great Britain. So this gave us a little bit of a warning, just like a couple of minutes or so. It gave us a warning. So if you guys have multiple screens, it may not be a bad idea to put TNX, but also the British pound right next to it, just in case. Okay. Speaking of currencies, Japanese yen. My goodness, thank God we canceled that order. Oh my goodness, thank goodness we canceled that order. They are losing control of the yen. Okay, they are just losing control of this. Thank goodness. Oh, thank goodness. I'm so happy. Remember how I was like so angry that I missed the trade right here? You know what? I mean, that would have been a nice one-day move, but I'm kind of glad I missed out, because I probably would have held and I would have had a bad mood, and then I would have been real grouchy now. Okay. Yeah, I'm very glad I stayed out of this. So Japan is losing control of their yen, and I think that's why I think that's why we're seeing some pressure on the 10-year note. Japan is the largest holder of U.S. Treasuries. So if they intervene in their markets, in their currency markets, they're going to be selling their foreign assets. And their foreign assets is like our treasuries, okay? So they'd be selling our treasuries for dollars, selling those dollars and buying yen, all right? And that, I think, is putting some pressure on my TLT trade, okay? It is what it is. I mean, that's life. That's why we kept position sizes small. It is for November. I will hold it for another day or two. This, at least the start of the day, looks a little bit promising, but I am not going to expect much out of that. It's probably going to go to zero or close to zero, but that's fine. I managed risk accordingly, kept my position sizes small so that if it does go to zero, no biggie, okay? I just give up 20% of those short put profits from last week, which is not bad. Actually, it's less than 20%, but let's just call it 20, all right? So that's that. ZF, somebody mentioned that this is making higher highs, higher lows. On a intraday basis, that is true. I prefer closing basis. And so yesterday's close, I considered that just a flat close. It was such a small difference. I'm just going to consider that a flat close. So we'll see where it closes today and tomorrow for the end of the week. Or today, tomorrow, and the end of the next day. So we'll see where it closes the end of the week. If it can close the week a little bit higher, I mean, that's one data point that's a little bit favorable. But let's look at some of our other indicators as well, too. Our New York high-low line is still curling down, okay? Right now, let's see what's going on. Intraday down, just like every other day before, okay? First 15 minutes, it always had, at least in the last few sessions, it has had a problem maintaining any positive high minus low intraday. And so it just keeps adding to this, keeps going down. Again, no meaningful rally happens unless this all curls up. Advanced decline, the breadth of the market still decreasing. And then equal weighted, I haven't even checked today. Equal weighted is still above its lows. So that is not even near its lows yet. I think a lot of the selling was in the larger companies. The smaller companies are actually doing better. Actually, RTY, surprisingly, is one of the stronger indices right now. It's pretty high quality. It got the quality of the index got much better after this last rebalance. So good for the Russell. NQ is definitely the weakest, and that we know from our IVW IVE chart has been going down. So this is growth over value. Whenever this is trending down, it means value is going to do better. The Dow Jones Industrial Average is probably the index that's going to do better. If it's trending up, it means the NASDAQ and growth stocks are going to do better. All right. So there's that. Our junk bonds high-low line is making new lows. It made new lows yesterday. Okay, made new lows. Whereas the S&P 500 has not closed below its lows yet. So is that foreshadowing what's about to come? I don't know. That I don't know. All right. Although it has been that when there are these divergences between the junk bonds and the U.S. stock market and the S&P 500, generally the junk bonds AD line is more right than the S&P 500. If there's a disagreement between the two, usually junk bonds wins. Okay? So I will see. We'll see. I mean, we'll see what happens. Okay? Could it be different this time? It could be. It could be. And there's some instances where, you know, it didn't work out exactly like that. But here, remember in June when the S&P 500 was trying to make highs, our junk bond AD line was actually curling down right before that June 9th ECB meeting. So that was that was one of the tells in the market at the time. Looking back, could this be another one of those? It could be. All right. I'm not going to be betting any money on it, but if you guys want to, you can. All right. So those are the indicators that I'm looking at. Again, the chart of the day, TNX. All right. Keep an eye on TNX. I think wherever TNX goes, that's where we're bound to see equities go. If this goes down, I think equities then, might have a little sigh of relief. If not, then, if this keeps going up, then multiples will probably get pressured. Today, actually, I also wanted to go over some meme stocks today, because I just been getting a lot of DMs about different sentiment-driven stocks. Okay, I saw some trades on here. One of our members was trading BBBY, some calls, I think. So generally, playing this is a fool's game. I keep telling you guys this. Look at this. I mean, we are down heavily from highs. I mean, if you guys, some of you guys participated in this back a year or two ago, you guys, if you held, this is a terrible situation to be in. I know a lot of you have AMC. Some of you DM'd me saying that you have AMC. Oh, you don't know what to do with them. Well, these are trash companies. Okay, so if you buy trash companies, I mean, what do you think the outcome is going to be? Now, one that actually is very surprising is UK. This is a Chinese property developer, but for some reason, I think on Reddit, I think people are using this to trade the United Kingdom. Wrongly so, but, that doesn't mean, that there might not be a play or something here as a day trade. For you day traders, I don't day trade. I'm not going to sit in front of my screen and get abused by 1-minute candles. But if you guys want to play this, I mean, right now people are using this to play their sentiment on the United Kingdom, even though it's some, I think, Chinese property manager. So that's very interesting. I've on the Reddit API, it is one of the most talked about tickers right now. This, all right. It will not end well. If you hold on to this, it will not end well. I think either direction, it doesn't matter. It will not end well. If you're smart, you'd probably stay away. If you want to be a day trader and you like the action, maybe that's your arena. Okay. BBBY, I got requests to look at this. Again, this is a trash company. I don't know why you would even look at something like this. Somebody told me that every 70 days there is a meme cycle where there's a pop in the stock. I'm not sure if that's true or not. There's February 23rd, July. Unless they consider this a pop, I guess it could be. Yeah, this, no, I don't think so. That's 70 day. It's probably like some average, but I average out how many data points. It's not reliable enough for me. But if you want to play it, sure. IV is pretty inflated. Yeah. Implied volatility 1.76. No thanks. No thanks. Not for me. There's actually some big names on here. The other day I noticed that AMD was on it. I know some of you guys are playing AMD. Oh, it's up today. That's surprising. INTC, Intel came out. It was one of our stocks that's on our watch list. Intel came out that they're laying off some of their workforce. And I guess it's shrugging it off. It used to be, I remember there used to be a time when companies would announce layoffs and there would be huge rallies because that means they're saving money. Maybe that's not the case in today's market. I don't really follow the news of individual companies all that much. Semiconductor index is flat. I know a lot of you are playing TSM right now. TSM is up. All right. I mean, this could be just very temporary. Okay. I went over this yesterday, but I'm willing to short SMH, the semiconductor ETF, when it gets to these levels, 244, 245 zone. All right. So I'm ready for that. If we can rally, I don't know if we will or not, but we'll see. Oil. Let's go to the commodity space. Oil is pulling back a little bit from 93, 94 zone. So we will see if this is just going to be a little covering, profit taking by speculators. It could continue up, but for me, this is still all noise. I am going to be shorting at higher levels still, okay? Plan hasn't changed for me when it comes to oil, all right? My long-term Chevron shares are doing really nice. On the next pop, I might sell some covered calls. Maybe like a month or two out, delta 30, 35 or so. So we'll see. We'll see what happens. UUUU is finally coming back down. I do have those collars. Finally, those covered calls are in the profit. And I have still those long puts at 5. So if we see a little bit of an undercut, I'd love to cash out of those puts and buy some more shares for free. I'd love to do that. Actually, not just buying those shares for free, I'll double up on the shares if we get to below 5. If we get below 5, I'm doubling up. All right. I think that's a great level. I think nuclear, you know my thesis on nuclear. I think governments are going to get more friendly toward this for the next few years. And I think this is going to be a good 3 or 5 year hold. All right. We haven't talked about metal miners for a bit, so I just want to talk about that. GDXJ. It's in my watch list right now. Dang. I really was hoping for it to keep going down a little bit more. Around this level right here, around 2780 or so. Around 28. $27.80 to $28. That would have been a great buy zone. I would have started legging into those January 2025 leaps in the money, deep in the money, like 65.70 delta. I was going to use that, do poor man's covered calls, and as it goes up, just keep selling covered calls. I think this and SIL are great opportunities if we can just dip a little bit more, okay? And if the dollar just starts screaming higher, these are going to go down. So that would be a great opportunity to get in, I think. Let's just look at the whole metal space in particular. XME. XME is actually holding up pretty well as an ETF. But if you're a metals trader, you really also want to keep an eye on the Australian dollar. This has put a lot of pressure. It's a lot, very, very correlated. And I think, from beginning of this year, you guys know, I think a lot of the quant funds are very active right now in the markets. And so whenever we see, I think, the Australian dollar come down, we start seeing selling pressure in some of the metals names. Because Australia is a big metal mining country. So whenever this goes down, it's usually a sign that metals may have some headwind. But surprisingly, it's been holding up well, even though Australian dollar has been sinking. Interesting. Okay, we'll see. We'll see if this with this holds. I would really like to see UUU at a little bit lower levels so I can load up on some more shares. Anyway, anything else you guys want to look at? Nat gas. Putin is saying the U.S. is forcing Europe to buy American natural gas. Henry Hub. You want to look at Henry Hub? Okay. Ooh, I mean, Henry... I mean, nat gas, I get it. It sounds exciting, right? It seems like to be like the place to be right now. I get it. Yeah, the moving averages, okay, that's fine. But here's the thing, okay? Here's the problem, all right? See this candle right here? See this candle? That's a $10,000 per contract move. So you're on the wrong side of that, and... I mean, you're going to be up all night biting your nails, okay? That is a terrible move. And it also, too, a lot of this can happen when the liquidity is really low, like in our off hours. And so you might get this slippage risk where, I think that's what they call it, slippage risk, where your stock, your trade gets executed way beyond your stop just because there's like pockets of no liquidity. All right, and that could be devastating. They don't call this the Widowmaker for nothing. You can play the UNG. What is UNG? Is this kind of like USO or something, like a futures rolling ETF? A futures rolling ETF. Okay, interesting. Let's actually do a little bit of analysis on this. Let's actually take a look. Are we in contango or not? Oh, we are in deep contango. Deep contango. Okay. So, I'm not sure UNG if this is like a futures rolling like USO, but if it is, there is portfolio drag on this. And there's going to be tracking error to the downside. However, why is it up more than the actual futures? That's interesting. I have to do a little bit more. This is my first time hearing about this. So let me do my research on how this ETF is constructed, and I'll let you guys know. But it is up more, unless it's just so thinly traded that it just has tracking error because of the market. It's just not efficient trading. Is that what it is? No, it's got millions in volume. I'll take a look and see what's going on with this. Does UNG have an options market? Oh, it does. Very good. Doesn't seem like much participation, does it? Okay. Interesting. Isn't there a leveraged ETF of this? Oh, UGAS is no more. Oh, Credit Suisse, of course. Okay, so do you guys know what the leverage ETF for natural gas is? Where's Nunya when you need him? Okay, well, I'll see. I'll do some research and let you guys know what I find. But let's final look. Dollar coming back up, and again, chart of the day, TNX. All right. Oh, cryptos. Again, I don't think there's much in crypto and the options market. The options market is really, really slow right now in crypto. And unless the OIs go up, I don't really think it's got that much of an effect on Ethereum price anymore. Yeah, see, there's just no action. There's really no action. There's really no changes. It's still mostly combo, regular trade, mostly regular trades, yeah. And most of the regular trades are call spreads. Great. I mean, almost all of them. I just don't see any large trades or anything. Oh, what's this? But this looks like a buy for 1,300 calls for November. 300,000. I mean, it's not that much. It's not that much, but okay. Oh, it's paired with this trade right here. So somebody sold the October, harvesting that premium to pay for this. Okay. That's still a very small trade, though. I don't see that, any other big trades. And again, what we're looking for is the open interest to increase again. Not the number of contracts, but the actual value. We want to see money entering the options market again. Around here, that's when we saw all that options activity really give us those signals. But I think at these levels, no, we need more money in this market in order to pull that market, to really affect the market, I think. But again, my plan hasn't changed. It's actually kind of interesting that crypto has been quite strong in all of this, just like RTY. And remember how we talked about that relationship between RTY and crypto? That's very interesting, actually. All right. Where is all this relative strength coming from? It really makes me think that quant funds are really in charge of this right now. A lot of the trading going on is a lot of quantitative funds. And all these like different historic quantitative relationships, I think, are playing out even more. There's a lot more correlations. But that's also true in bear markets. In low liquidity markets, everything gets correlated. But even in the relative strength, crypto is mirroring RTY. I think a lot of the speculators got wiped out in both directions on crypto market, to be honest. And that's why it's just really low volume and just chopping around, because everybody just got wiped out. So we'll see what the big moves are later on. Okay, I think it has a lot to do with our liquidity data. Junk bonds again made a new lower low, and again, chart of the day. I cannot stress this enough. I repeated myself so many times on this. TNX chart of the day. This needs to settle down somewhere, okay? It just needs to settle down somewhere so that institutions can then know exactly what rate to use and what multiples they find valuable, okay? And they can't do that unless the 10-year Treasury kind of calms down around a certain zone, all right? And we'll see when that happens. Oh, look at that. Market's back up. Kind of it shrugged that PPI report. Okay. Cool. Oh, one of our members was Boyle is the leveraged nat gas. Boyle. Oh, man. Look at that. Oof. Wow. Look at that IV. My God. Okay. Well, good luck. Good luck. But it's interesting. I don't know. Maybe, I don't know about doing an options trade on Boyle, but maybe the common shares of this, I don't know. Maybe I might do that. Set some stops and treat it like it's an option. That's interesting. Let me mull this over for a bit. Okay, let me mull this over. I'll let you guys know what I do. Let's see. One of our other members mentioned that it's at the 200. Was it 200-day moving average? Hold on, I'll look for it myself. 200. That's 200 week. Let's do chart. Oh, it is. Wow, right at the 200-day moving average. Okay. And 1 week Bollinger Bands. And what about 1 day, the daily Bollinger Bands? Okay. Okay. Okay, maybe if it undercuts and touches this, that would be a good zone to go. I mean, it's closed under before. It could just undercut it a bit. Undercuts it, touches this 2 standard deviation Bollinger Band from the bottom, and then maybe it goes up. I would try long there. When it gets to 6151. 6151, it touches, and then if it closes below, we get out, and then we can use Boyle to do that. The Boyle common shares. I mean, that would be what, like around 43, maybe 43, 44 or so. And then if it goes back up to what $10, that's like 43 to 100. That's not bad. And then if we think it's going to stay elevated like that, and if IV stays elevated, we can always also sell covered calls, right? How much are this covered calls here? For deltas, for delta 35, wow, it's like 10%. Delta 35s, not bad. Okay, I'll look into this. All right. I'll solidify a plan, and I'll let you guys know a plan for this tomorrow, unless we see some big movements. Unless it hits there today, then I'll let you guys know in the Discord. Any questions, any comments, any rude remarks, anything else you guys want to look at? Alta is the ultimate hedge against inflation. What is Alta? Alta... What is this? Beauty? One of our members suggested Alta is an inflation hedge. I don't know if he's kidding. Maybe he's kidding. I don't know anything about this company. I'll have to do research on this. I don't know anything about Alta. But looks like it's been flat for a while. Anything else you guys want to look at? All right, in that case, that wraps up our session of the morning market memo. Again, there's links in the description. Come join our Discord, be a part of a growing community. There are no sub fees, no paywalls, of the people, by the people, for the people. If you enjoyed our video, go ahead and hit like, follow, subscribe, comment, show us some love, all right? I'll see you guys tomorrow, same time. New York Stock Exchange opens at 9:30 a.m. Eastern time. I'll see you guys then. Have a great day.